Welcome everyone to yet another session of the Singapore FinTech Festival. My name is Chris Lukolyo. I'm the Digital Country Lead for UNCDF in Uganda. And we have a very interesting panel for you today. We will be discussing emerging approaches for financial resilience of micro enterprises. Now, as you know, as I'm sure you all know, micro enterprises have been tested quite a bit during this pandemic, and only those that have had either cash reserves have been resilient are the ones that have been able to survive. And so it's no doubt that they've been stretched to their limits. And in today's discussion, we will be looking at what the experiences have been of several of our panel members. They come from very diverse backgrounds, and they will be sharing with us their various experiences and ideas. And so, again, really exciting panel today. I should mention that UNCDF in Uganda is implementing a program on building an inclusive digital economy. And in that program, we're working very closely with small enterprises, micro enterprises. So once again, we have seen firsthand just the devastation as many people are forced to stay home, as we've seen several lockdowns and restrictions on movement, as businesses are unable to access their clients and unable to access credit and markets. So hopefully we can shed some light on what's been going on, at least in Uganda and other countries, but also we hope to get significant feedback from our participants. Now, I'm going to invite our panel members to introduce themselves. Each one will take 5 minutes to talk about themselves, what they do, their background, and then we will later on launch into our panel session. So without much further ado, let me invite Buhle from JUMO World. Could you please introduce yourself?
Thank you, Chris. So my name is Buhle Goslar, and I am the CEO for the Africa region and Pakistan at JUMO. JUMO is basically a technology stack for building and running financial services in emerging markets. We have had the good fortune to be able to partner with some of the leading banks and telcos, some of whom you might recognize: Absa, Ecobank, MTN, Tigo Millicom, and Airtel. We're currently live in 6 African markets and Pakistan. In fact, our newest market went live just last week, Cote d'Ivoire, our first Francophone market. And we have been able to serve since 2015 in excess of 16 million customers. We have originated over $2.5 billion in loans on our platform. We actually do offer both savings and lending on the platform, and the majority of our customers, roughly 2 in 3, are MSMEs, and a lot of those micro entrepreneurs. So I'm very excited to be joining this panel because it's clearly a segment that we have spent a lot of the past 5 years really getting to understand, to get to grips with. And I think that over COVID, we have learned a lot more around the resilience that these micro entrepreneurs have. And we've also been thinking a lot over the past couple of months around how we can be a part of the recovery. So I'm looking forward to today's conversation.
Thank you so much, Buhle, for that wonderful introduction. Let me now invite Geraldine Makunda from FSD Kenya to introduce herself. Geraldine, over to you.
Thank you very much, Chris. I'm delighted to be here. I'm Lukania Geraldine Makunda from FSD Kenya. FSD Kenya stands for Financial Sector Deepening Trust Kenya, and it's based in Nairobi. It's an independent trust dedicated to the achievement of an inclusive financial system that supports Kenya's long-term development goals. And we work closely with government, the financial services industry, and other partners to develop financial solutions that better address real-world challenges faced by low-income household enterprises These are the micro and small businesses, and then also the underserved groups such as women and youth. So my role as the Market Information Project Lead at FSD Kenya involves the drive of the use of data, with demand side, supply side data, real economy data, to influence the market to use data to come up with solutions that will encourage inclusive growth. And more than ever, the COVID impact has kept us working day in and day out, just trying to get data out there to be able to know the impact and also impact of COVID, and also just influence or drive solutions by government and financial service providers on how to support households as well as the small businesses. So as the Market Information Project Lead, I run the financial access study, which we call the FinAccess survey, which we do with the Central Bank of Kenya and the Kenya National Bureau of Statistics. And it's a study that we've been running since 2005 to now every 3 years. And the most exciting thing is that this study now will really test the financial inclusion levels of Kenya, because we know COVID has sort of eroded a lot of the gains, especially for small businesses. And this study will be able to tell us how it's been since the last year we did it, and now post-COVID. So I'm very excited to hopefully also share insights from that study at some point. So I've been working with FSD for 7 years, and we're seeing a lot of changes in the market, and I'm looking forward to just talk about the segment on the small businesses, which we're passionate about. And as Chris had mentioned, we also work with the micro and small businesses. So I look forward to talking to everyone about it and our experience. Thank you.
Thank you so much, Geraldine. And lastly, let me invite Alistair Sassock from Safeboda. Alistair, can you please introduce yourself? Tell us a bit about what you do with small businesses. Thank you.
Thanks, Chris. Yeah, super excited to be here, and thanks so much for the invitation. So yeah, I'm co-founder, co-CEO of Safeboda. At Safeboda, we're basically building a consumer mobile app platform that's using motorcycle taxis as the entry point to a super app. But we started as a community of Boda Bodas, and Boda Bodas are motorcycle taxis. So they're two-wheelers, and they're a very common form of transportation in many cities in East and West Africa. We started in Kampala, in basically in 2017, we really got going, and we are in Nigeria and also in Kenya. So we're in 3 markets, and yeah, those Bodas are really, micro entrepreneurs in many ways. Importantly, for a Boda Boda, they see themselves as their own business. So we kind of brought that together by giving these drivers a sense of ownership and purpose. They had orange helmets, they had a reflector jacket with their name on the back and with a Safeboda logo on the back. And then they became a very, recognizable service in the city. So you'd press a button and you would get a Safeboda to your destination via the app. So that's kind of what we've been working on. We have over 1 million, 1.5 million downloads. We have hundreds of thousands of transactions, and yeah, it's just been a very interesting experience. We have also expanded during COVID into other on-demand services. So those services being food and shop. So how do we think about giving people in African cities access to things they need? And we partnered with UNCDF on a market vendor project. So we took vendors, so kind of people selling fruit and vegetables in local markets, and put them online. And so that's been a really exciting project this year that we've worked on with UNCDF and actually a few other partners as well, to provide services to both the supply and the demand side of the marketplace as well. So yeah, really excited to be here, and really interested to learn more from the other participants as well. Thanks.
Thank you so much, Alistair. Thank you. Thank you for your introduction. So let's jump right in. I mean, Geraldine, I'm going to come back to you first, just to highlight that, you know, in the region, in the East African region, Kenya is seen as the market that has some of the more financially resilient micro enterprises, especially, you know, in the digital sector, but in other sectors as well. And if you could, please, could you highlight for us, you know, what does financial resilience mean in the context of micro enterprises? What does that mean for these small businesses, some of whom are, like Alistair said, you know, one person, you know, ride share businesses or small mom and pop shops? What does resilience mean in this context? Thank you.
Right, thanks, Chris. Okay, resilience and what it means for businesses. So maybe I should start with the ideal situation, where when we can go to Japan, where we know that businesses survive for over 1,000 years. Many have been there for over 100 years. And you know Japan as it is, they have so many calamities, earthquakes, and we keep wondering why is it that they stand all these calamities and bounce back. So I can give an example of a company. It's a small family-held run small business, which is typical of most businesses in Japan. And it's been running for the past since 1,000 years ago. And they specialize in making rice cakes. And how they started doing the business is because of the many calamities, you'd have many Japanese going to Kyoto, to the shrines to offer prayers. And in that process, the family they came together and decided to be serving the rice cakes. And the ingredients have remained the same since more than 1,000 years ago and continue being the same. And the only time they changed the price was during the World War II when in fact, that's when they introduced the pricing. And the price has remained the same since the World War II. And nothing has changed, but they've continued standing. And that's a story with so many other companies, as I said. And one of them that I can think of is Nintendo, because I know my son plays games with it. So it's over 100 years, and they started with, I think, making cards, and then now they moved to the games, and they're still standing despite all those calamities. Coming back home, and just before I go there, maybe I should talk about why the resilience there. So we see that many Japanese companies are there because they want to give value. Like this company, the rice cake, it's like they're giving to the community. So even profit is not at the forefront, and they have this value that over these centuries they've been operating. There's no generation that would want to drop the ball. So they have that ingrained driving them to keep going. And then other things that that have made these businesses stand are things to do with because of the calamities they've gone through. They've learned to save a lot, and even when they've made profits, they don't increase their expenditures. So their reserves are very, very, very high, and they can tackle calamities. And then the other thing is credit is quite affordable there, and the government supports a lot of stuff there. So that's the ideal situation. But when it comes to Kenya and many other sub-Saharan companies, and also as Chris says, many are micro businesses, and they're run by single persons. Many of the business owners are coming to run businesses because they don't have any other form of income. And businesses is a fallback plan to make money. Most of them operate informally. They use informal financial solutions to meet their needs. And so actually COVID brought all these things clearly to the limelight, that there are so many structures that are not supporting many of the businesses. And majority of Kenyans who are in business, about 60% are micro, and they rely on wholesale businesses and retail trade. And these were really affected by COVID. So going back to the definition of what resilience means is how are these businesses able to come back after facing the shocks of COVID and many others. There's a drought and all that. And ideally, as players in the financial inclusion sector, would think that finance would work for them, but it hasn't worked because many are still struggling. And I know the success stories which we'll hear about from my panelists, co-panelists. But FSD Kenya and the partners, the Central Bank of Kenya and National Bureau of Statistics, luckily we got into frameworks that were able to now measure resilience. And in terms of resilience, we're looking at how a business is able to meet their liquidity needs after a shock. How are they able to still have savings to deal with shocks? How are they able to just be ready for any shocks? And with those 3 dimensions, we could use that to determine how resilient these businesses are. And just to conclude on that question, sorry, it's taken a while, but it's just the ability of businesses to do that. How can they come back and meet all these needs that they require? And as I said in the beginning, when I was introducing myself, we're really looking forward to the next round of the survey because it will really show us how the micro businesses are doing after 3 years of almost, first of all, recovering from drought and all that. Then again, COVID happens. So we need to see how resilient these businesses are. Thank you. And over to you, Chris.
Thank you so much, Geraldine. Indeed, we really appreciate that you were able to bring an example from a totally different market to give some context, because you're absolutely right that as we think about financial resilience, what are we comparing to? And I think you're right that being able to survive shocks is at the center of this, because we are indeed in the middle of a major shock. Alistair, maybe over to you with Safeboda. And we talked about this earlier, that many of the riders that you deal with, the motorcycle taxis, these are small enterprises, micro enterprises in and of themselves. And so maybe you could highlight for us what have been some of the key financial resilience challenges that you've seen before, during, and after COVID that you can highlight for our audience. Thank you so much.
Yeah, no, great question. So we've learned to kind of work with 2 different types of micro entrepreneurs, right? So firstly, it's the Boda driver. So the Boda driver is a motorcycle taxi driver. He drives around, he picks up people, he makes around $8 to $10 a day in Kampala. And that's very cash heavy, that's cash in the pocket, but cash that also goes out to various other expenditures in the day, right? So that's kind of their day-to-day operation. And we as Safeboda have tried to build a driver wallet that, an e-wallet, right, where drivers make money through the Safeboda app and then can take that money out of the Safeboda app when they need to, as opposed to just having cash in your pocket. And then when you go home to your wife at the end of the day, how much money do you have left? Whereas we can force savings on an informal economic activity, right? And I think that's like the challenge, right? Is like, how do you go from informal economy to something more formal that still makes sense for them at the income level that those drivers have, right? And so we kind of knew this from day one. So one of our co-founders, Ricky, is a Boda driver, right? And so inherent in the design of how we thought about our system was that approach of understanding the daily cash flows of Boda drivers. They actually make a lot of money, but then the challenge is savings and keeping that money for investment, right? Very similarly, we have the food in the shop vendors. So on our shop platform that we partner with UNCDF on for our local market vendors, they have the same challenges, right? Like drivers have asset financing challenges with their bikes, market vendors have financing challenges with, having enough stock or investing in their business or investing in the simple kind of, products they need to make their businesses work, right? Also, shop vendors have a big challenge in supply that they need. So the cost of materials, cost of plastic bags, cost of paper bags, cost of the where they're getting their produce for them to sell. All of that is very variable, and so they kind of struggle with that. So that's another big challenge that they have. And then, of course, in COVID, like the other challenge that we saw with these micro enterprises was, of course, like market access, where the foot traffic, which is 99% of their business before, was basically banned due to the lockdowns in the government in Uganda, of course, to stop the spread of COVID. So we tried to use the Safeboda app to connect these primarily market ladies to new demand, right? But yeah, I think like it's definitely. It's nothing special or different with motorcycle taxi drivers or with market vendors. It's the classic challenges of capital allocation, access to finance in the right way that makes sense for them as users. So, if we use a human-centered design approach, how do people want to pay that back? How do people understand, what they're paying back? What are the services that we can bundle for them to protect them from economic shocks and make sure that they can, do economically well from it, right? Like you're designing any product or app, it needs to work for the user. And so I think like that's a fundamental, obvious point, but something that can be overlooked, particularly in, sometimes more the aid or development sector, where, sometimes it's a bit too much of a top-down approach rather than a product-driven approach where we understand capital constraints, right? So the more that Safeboda can provide a history of income for our drivers and say, well, every driver used to earn $10 a day, so now they can get a loan for a motorcycle, and we have a few partnerships for that. That's life-changing for them, and then they can become a great, contributor on our platform and build a great business for Safeboda as well. So yeah, I think like we've definitely seen some of the challenges for these micro businesses, and yeah, it's an exciting challenge that like Safeboda is trying to humbly figure out.
Very good, Alistair, and thank you so much for those thoughts. And yeah, I think you're absolutely right that indeed some of the challenges that we've seen relate to the ability to save for those shocks, like Geraldine mentioned, or even providing easy mechanisms to achieve those savings. I'm going to turn to you, Buhle, and really, I think that JUMO World's place in the financial technology sector is unquestioned. We know several small businesses, several small enterprises that are existent because of the stack that you provide, that you talked about. And so maybe you could highlight for us what practices you've seen in your line of work that contribute, that help to build financially resilient micro enterprises. What works? What have you seen that doesn't work? Maybe you can shed some light on that for us. Go ahead, Buhle. Thank you so much.
Great. I think the way I'm going to approach this is by talking firstly more generally just around some of the things which are core to our platform, which we've realized over the course of this year, that these are things which have served the micro entrepreneurs on our platform well, although it wasn't something that was built for COVID specifically. And then I'd just also like to build a little bit on some of the comments that Geraldine and Alistair made around resilience more generally. So in terms of the JUMO platform and what I think has worked well and worked especially well during COVID, I think the first is that we really have focused right from the beginning on access as a non-negotiable. So access at the broadest scale possible, really designing for the lowest common denominator so that whether a customer has a feature phone or a smartphone, they're actually able to access services on our platform. Now, obviously, this becomes really important when you have a pandemic that has such significant financial consequences for people because they don't need to spend money on internet. And as you know, a lot of micro entrepreneurs, especially in our African markets, are highly cost sensitive. So this is something which has made a big difference. The fact that we are partnering with banks and telcos was really our business model innovation approach. Again, that has put us in a really good position through COVID, where in fact mobile money has really become more than ever the backbone of our economies across Africa. I think someone once made the comment that payments are like the connective tissue of economies, right? And in Africa, mobile money is that. So that has put us in really good stead. So access. Then I think the second feature on our platform that I think has served us well and probably has served many other people who focus on this well is choice and empowerment, right? We spend a lot of time really trying to understand the different segments of customers, making sure that in the design of our products, we give them choices that matter. So flexibility, whether that relates to term of the loan, where they can repay it, the same for savings as well, giving customers features which give them the flexibility to essentially almost customize what is offered on the platform to suit their business. Because as Alistair intimated, there are differences, right, between micro entrepreneurs. Some of them are operating in very kind of high velocity type, high transaction volume type businesses, whereas others, the sales cycle is a lot slower. And obviously, all of these things have implications. And we've tried with all of our products always to make it really configurable and to present the choice in a way which is empowering without being overwhelming to customers. And I think that is something which is important across all markets and really has put us in a good position. The last is actually also linked to the first one, access, which is really focusing on financial value. And what that means for us is not just looking at the final price, right? But looking at what does it cost to access the service end to end, right? Because as we know, our micro entrepreneurs play so many roles. And I'm especially passionate about this issue when it comes to women, right? Because they often have 2 or 3 full-time jobs, and time is also money for them. And so in the way in which we've designed our products and customer journey, we really pay a lot of attention to that. We don't ask for data or information that's not absolutely crucial. We don't add any step to the process that is not crucial. And in fact, customers are able to access our services in real time, just seconds, really. So I would say those are kind of the 3 pillars which are core to our design philosophy and just approach, which over the course of COVID have put us on the front foot. I spoke about, the business model innovation component and how that's allowed us to reach the largest number of people. And one of the things that we were able to do with our bank partners over COVID, for instance, was look at pricing and go, people are not able to freely move around in certain markets which went into lockdown. What do we want to do about penalty fees, right? And we were able to waive penalty fees. We were able to work with the telco partners to ensure that the appropriate messaging was available. Also, if customers asked mobile money agents, etc. So that's something which has been, I think, a real kind of bright light in an otherwise dark period. The last thing I just wanted to say was just commenting on this subject of resilience, because it's something I've also been thinking a lot about, and just looking at some of the survey data from micro entrepreneurs on our platform and speaking to peers in the industry. And I was thinking, what are the kind of trying to kind of sense make and find the patterns, right, of which businesses are surviving and why, and what can we learn from it. And I have like 4 observations, right? So the one is kind of linked to this idea that variety absorbs variety. And in a situation like this, what I'm seeing is that the situation itself presents a lot of variety, right? It's a multifaceted issue. It's not just health, right? It's the health, it's your health, it's the economy. Our whole social fabric itself is being challenged. You can't see your family. So the problem that we're facing has huge variability. And what I'm seeing is that the entrepreneurs who are surviving are those who also have huge variety in terms of their skills, in terms of their income sources. So we're seeing, for instance, you'd find someone is maybe a mobile money agent, but also is running a little duka shop, but also actually sells hair extensions on the side, etc. And those are the types of entrepreneurs that we're seeing surviving. And then the other thing, is yes, absolutely the buffer. So do you have any savings? The third thing is I'm seeing a lot of entrepreneurs who are more used to shocks of different types, really rebounding well. And I think, in the micro entrepreneur segment, because a lot of these people are solo entrepreneurs, they have actually been through a lot of shocks, even though it's not COVID, right? Because oftentimes, they have to provide for family in the rural areas, plus their own family. If there's a death in the family, that's also a shock. So we're seeing people who've been through those types of things really rebounding very quickly. And the last thing that I'm seeing around this resilience theme is also what tools are available to fall back on. And so, we've seen in a lot of our markets where, especially in the mobile money environment, where there's kind of a more aggressive attempt to acquire merchants and onboard people into accepting mobile payments, that those businesses have been able to rebound a lot faster. So those are just some of the interesting patterns that I've been observing. Back over to you, Chris.
Thank you so much, Buhle, for those wonderful insights. And I think I hear several trends in our conversation here that indeed we're seeing, whether it's new ways of saving, as Alistair mentioned, that several of these motorcycle riders were not saving, they were making a lot of money, but also you're talking about, I think, that diversification where somebody might try different revenue streams, one job versus having several jobs. And I also, I think, Geraldine, you mentioned that, at FSDK, you've also done quite a bit of, that you've done some surveying of these small businesses. And so I'm assuming that I think you all are seeing several of these trends come out as you talk to these small businesses, as you engage with these small businesses. I guess the one thing that I would like to ask is, what are some of those? I think it's already coming out what some of those trends are, right? In building financial resilience of these micro enterprises. If any of you could talk about, again, some more of those trends that you're seeing in building financial resilience. What are you seeing? But also, if you could talk about what are some of the environmental factors that are driving these changes. Yes, we've had COVID, but I don't think over the last 6-9 months, this is when all this is emerging, right? That some of this might have been building already. So what are some of those environmental factors that are driving this that you're seeing? And indeed, what are some more of those trends? So maybe, Geraldine, if you could highlight some of those for us from your surveys, from your interactions, and then I'll go on to others. Thank you so much. Geraldine, you might be muted. Sorry.
All right, I'm very sorry to have been trained on what to do. Yes, I want to build on what Buhle said, about the diversification of businesses. And that's one major thing we're seeing in Nairobi, especially, where, of course, most of the businesses are located. So an example I can give is of a lady who was focused on making school uniform, selling shoes for school for kids and all that. But because of the lockdown and schools closure, she switched to making masks. And through that, she's been able to even increase her income more than what she used to make from the selling of uniform. So I'm just emphasizing how one of the things that Buhle says about the diversification, and it's working very well for many businesses in Kenya. The other thing is on the new digital marketing channels that have already been covered a lot, but we're seeing very many small businesses, moving from the coming into the shop, I think because of the lockdown, and now many have realized that Facebook and all these social channels can work for them. And this is not something that used to be done by the micro businesses you're seeing, but now it's changed because we realized that only digital was working for them at that point because of the lockdown in Kenya. It was, I think, for about 3 months, and business had to survive. So just discovering new channels has helped many businesses cope. The other thing is acquiring new skills because some of the micro businesses, like people like barbers or hairdressers, because of the social distancing and people fearing getting COVID, they decided to move into other ventures that didn't require that social close interactions. So they're going on to selling things like shoes or just things that don't need any interaction. And we're seeing a lot of that happening both in the rural and urban centers. I could also talk about the new service offerings, and there's a story about a boy called Joe. he used to sell things in his shop, and then customers were not coming. So his mother gave him some money to buy a motorcycle. And now instead of customers coming, he's using that motorcycle to deliver and actually even offering more efficient services. And these are some of the things that I think businesses are realizing that they will continue to do even beyond COVID. And it's a big win for micro businesses because making use of a digital facility and other infrastructures is going to sort of put pressure for the government to continue making this infrastructure work for many of the small businesses, because before that, I think many businesses were struggling. There's nothing to do, but now there's a pressure that's pushing. So different stakeholders will be able to support businesses in those areas, and we hope it's going to be for the long term. Yeah, thank you. Back to you, Chris.
Thank you, Geraldine. Alistair, any thoughts on this? Again, what trends are we seeing on your end, but also what are some of those environmental factors that are driving some of these new trends in building financial resilience? What are you seeing?
Yeah, I mean, we're obviously in a space where it's about getting people online, right? It's about getting people to use online modes of payment, marketplaces, etc., which is challenging. I think we've seen some interesting trends that I think will be quite obvious to people, but they're pretty important, which are smartphones. So people getting smartphones, the cost of smartphones, there's a kind of a Moore's law. It's getting cheaper, and companies that are coming out with financing for smartphones. So our drivers get a smartphone on loan and then pay that back through the earnings that they make on the Safeboda app, and that's been instrumental. I know another number of other companies are moving more in that space, such as M-Kopa. They've kind of you hear more about M-Kopa phones and M-Kopa solar, which is very interesting. And then I guess the cost of data is a highly prohibitive area. What we've seen, right? So in Uganda, the cost of data is still very high. It's significantly more than India, right? So what does that mean? Well, it means that it's harder for you to get online. You already don't have a large asset base or a large income, and you're asking people to go online to participate on things, and you have very high cost of data. In addition, we have a social media tax, for example, in Uganda, which means that people to go on WhatsApp, they have to pay around 20-30 cents, 1,400 shillings Ugandan to use WhatsApp, right? every week. So all this does is increase the barriers to entry for online, unfortunately. So, there is an overall positive trend, and of course we're part of that, and we feel great for ourselves. But there is also a number of fundamental infrastructure challenges and enabling factors, which kind of Chris was alluding to. Like, what are those business environment factors that we need to think about? And then I think, the final point would just be that, trust is another thing that we think is very important, right? So if consumers or micro enterprises can trust the platforms they're using or the services they're using, and those services don't, for lack of a better word, screw them, then you can build something, right? And I think, M-Pesa, for example, in Kenya has shown pretty strong customer service, pretty strong product market fit, have really tried to service, the country as best as they can. And that has led to a strong trust in the product. People go online, people use it, and I think that's another basic point, is that we need products that work and are products that are of good value, and also that the consumer is protected as well, right? I think a lot of the challenging on lending apps and other areas we've seen, particularly in Kenya, has been that because people are scared and don't trust some of these platforms anymore, or there's just been a fear that these platforms are predatory as well. So I think that trust plays a very important point, and government and the enabling environment can help, make trust, maybe improve trust in a way. So yeah, I think that's some of the trends. I think we're definitely moving in the right direction on all of this. But I think we need to recognize that there are some large infrastructure related barriers that prohibit faster growth. When you think about the investment in India of reliance into cheap internet for everyone, it was obviously a market share play, but those kind of pushes that we've seen from those kind of companies led to huge changes on the ground. So it's also about to what extent leading private sector companies can also help on those sides. So I'm obviously focusing on the internet side of business and on micro entrepreneurship, but I think ultimately, that's the way that things are going, and it's just a matter of how we can think about supporting these and accelerating some of these initiatives.
No, I think I completely agree. Indeed, that advances in more access to online and also more usage of online services have definitely driven a lot of the trends in building a financial resilience. I wanted to invite Buhle to give her comments, but Geraldine, were you saying something real quick?
Yeah, I just wanted to add something on what Alistair said, and just because he mentioned M-Pesa. So one of the things that the mobile money has enabled is because of the declaration by governments that payments should be done digitally. That was at the beginning of the COVID impact. And then what we saw is that many businesses, especially on the M-Pesa, moved to using till numbers. And that in a way enabled, and till numbers is sort of like a business number. And those enable businesses to have records of their transactions. And one of the hindrances for the MSCs is that they don't have records, and because they are very obviously informal. And so a good trend would be for us to see the use of till numbers going on. But of course, there are other challenges because most of these, some of the infrastructural challenges, at least for M-Pesa and mobile money, is they're perceived to be very expensive. And then even just around the trust issues, somebody transfers money to make a payment, and then the next minute they reverse back to them. And I think those are some of the challenges that would still need to be tackled for it to work seamlessly and to get more people onboarding to digital. All right, thank you.
Thank you so much. And I think you're absolutely right. Indeed, there are issues of trust, and in some cases we've seen that actually the move to digital platforms has helped to deal with that, right? That there's more traceability and some issues of ID still exist. But maybe to you, Buhle, about again, as we see new trends in micro enterprises building financial resilience. What are some of those environmental factors, that are driving this? Is it simply, a need to survive? Are there new regulations? What are you seeing in your line of work that you think is driving some of the, because I think you mentioned even the stack that you provide, you allow that flexibility, and then you see these new innovations as people take your stack and create new business models and so on. But what's driving that? Maybe you can highlight that for us.
So I think, thinking about the resilience of micro enterprises and the role that digital platforms can play in that, and your question around what are the environmental factors. I think there are a couple of conditions which I think are the necessary conditions for these digital platforms to make a difference to micro entrepreneurs. And I'm going to talk about a couple of different countries because we obviously have, the benefit of operating in multiple countries. So I think the first one is definitely regulatory. And I would say that, what we're seeing is that, where you have an enabling regulatory environment, it's much easier to actually innovate for micro entrepreneurs. But I also think that where you have governments that are more kind of actively supportive of digital platforms, this makes a very, very big difference. So, if you take, for instance, Tanzania, they've fairly recently launched biometric identification, and the government there has also been very active in digitizing of payments, including G2P payments, right? So, those types of things really kind of push adoption. I think that makes a big difference. The other thing is also, which I think is a necessary condition for success, is the kind of active and advanced services that you have available already, right? Because when you're trying to get people to adopt, they're kind of making their decision and going, if I participate more on this platform, what else is available to me? Because it can't be just your service. And when it comes to that, one of the things that we really need to watch out for is environments that allow the formation of data silos, because a lot of these digital platforms essentially run on data services, right? And I think data is one of those things that if it's not flowing, you're just not seeing the value of it. So, environments which, really promote things like interoperability, the micro entrepreneur being able to retain their digital footprint and be able to move with it, those are the types of places where you're seeing a lot of success. And then the last one is obviously around cost. And I suppose there as well, we've kind of spoken at length about this, cost of data, but I think the other important one, which Alistair touched on, is not penalizing people for using the platforms, right? So I definitely think that when it comes to you're asking people to come online for the first time, they already have some doubts about exposing so much of their financial transactions. So I think we do need to start to think very carefully around what kind of scaffolding we provide for these micro entrepreneurs as they digitize and become more visible. So thinking carefully about things like tax is definitely going to be really, really important if we want to continue to drive adoption, both by the micro entrepreneurs and of course the consumers.
Thank you so much, Buhle. And I totally agree. At least, what we've seen in Uganda, for example, is, as Alistair mentioned, we've done some work with Safeboda, for example, which is working with several micro enterprises, which are these motorcycle taxis, and indeed that drive to take on some of these activities, these practices that enable them to be more financially resilient has been driven indeed by technology. So the access to technology, the access to the Safeboda platform, but also indeed regulation. So an enabling policy and regulatory environment that enables an entity like Safeboda to operate a platform that they can indeed extend to these micro enterprises has played a big role. And indeed, I think that the trends that we're seeing, while many of them are driven by technology and by regulatory and policy environment, I think it's also clear that as this pandemic continues to challenge all of us and to challenge the various small businesses that we have, that indeed we're going to see many more emerging trends and new practices really as businesses struggle to survive. That's really all the time that we have for today. I want to really thank our panel members. I'm really grateful, and I'm sure our audience is grateful for your insights. We've come to an end here, but please do stay on the YouTube channel and see other panels that are coming up. Once again, a great big thank you to our panel members. We really appreciate your time. Thank you so much.
Thank you, Chris.
Thank you.